Sumant, why get in now, and what kinds of stocks do you look at, especially given, I mean, we just had earnings from Adobe, which has been a strong fundamental performer, but based on perhaps strong summer seasonality, FX headwinds down today?
Well, first, thank you for having me. It's a real pleasure to be here, and I'm happy to share some thoughts and views on this interesting market that we're living through. There's a reset in pricing and equity pricing going on around us, and I don't think it's completely done yet. But if you look at the long trend here, if you look at the thematic adoption of new technologies, I still think there's a long way to go before we see anything like a mature market, especially in areas like cybersecurity, in areas like fintech, enterprise automation using artificial intelligence type of technologies. So we remain bullish. At the same time, I think we still are looking for a new normal when it comes to pricing.
Okay, so I should mention Adobe now down just about 1.25%. It was down a lot more than that after hours. So perhaps investors digesting that. What are the most important filters to use to decide which fundamentals are worth buying on right now?
I think it remains, again, back to the fundamentals of investing. You look at the company performance. We look at companies in the SaaS software universe and how they're performing, how they're keeping their customers happy, the net NPS scores, their renewal rates, their ability to continue to sell to their existing customers as well as add new names. But in this world today, I'd say it's also very important to look at the quality of management. I think nothing substitutes for leadership. And that's even more important in today's environment in many ways.
Sumant, as you look across the landscape, you mentioned that valuations have certainly compressed, may not be done. Someone else was on our air this week who thought maybe that compression wasn't done. That's Orlando Bravo. He was far more cautious than he has been about the markets and valuations. And I wonder what you think that means for the PE space, which is sitting on tons of cash and is thought to be a major deal maker in this environment. Does it look a bit more cautious? Who do you think are going to be the acquirers in this environment?
Well, large strategic, I would say, corporations have been priced out of the market. M&A has been very difficult for these guys to justify. And the reason is that the public markets was giving companies a much better valuation than could be justified by strategics. So if you look at large fintech companies like the Visas and MasterCards, they're sitting on tons of cash. They have expanded their business to be beyond just the card business, the branded card business. They are trying to be service providers and provide service to their customers, either merchants or consumers. And I think they're going to start looking at acquisitions and grow their product portfolio. So I think you'll see more and more of this starting to happen. My guess is towards the end of this year, maybe early next year, as prices stabilize, people really realize what valuations in private markets look like. Because it does take 6 to 9 months, sometimes a year, because good companies have raised a lot of money in the last 2-3 years. And so they don't need to go out and test the waters. But it will happen. It has always happened.